Welcome to the Get Real Podcast, your high-octane boost of full-on reality therapy for personal, business, and investing success with your host, Ron Phillips, because somebody's got to tell it like it is.
Ron Phillips here. Man, I've got a great friend on the podcast today. We were talking before the show about what we were going to talk about today, and here's the thing: whatever we decide to talk about today, it's going to be amazing. Jack Bosch, longtime friend of mine. My gosh, how long ago has it been since we met each other?
At least 10 years, probably more like 12, 13 years, I would think.
Yeah, it's been so long. Met Jack a long time ago, and then I joined Jack Bosch's mastermind called the Ultimate Boardroom back when it was brand new. Founding member, Jack. That's
right. That's right. You are a founding member. Yes.
And the Ultimate Boardroom.
Yeah, that's exactly right.
Jack seems to surround himself with really high quality people, because I still have some really good friends that I met in that mastermind and business associates. My CPA I met there. Another guy who's done some fractional type CFO work for me over the years. I mean, just
Larry. Yeah.
Oh, and my initial tech developer for my tech platform I met there. Anyway, great people seem to be around Jack all the time. Anyway, Jack has been in the land business forever. He and I, unbeknownst to each other, we were both flipping land. He did it a long time before me, but anyway, we were both buying land at the same time, and a ton of land. And then when I met Jack, and I realized that he was the land guy, and I was like, wait a second. I thought I was the land guy, but I wasn't teaching land. Jack actually teaches people how to do it. He's got a great program.
And you did a very specific kind of thing. You went to banks and bought a huge portfolios of land, and then at dirt cheap, like pun intended here. And you turned around, and since you have a huge customer of investor database, you sold off those pieces of land to them. They held on for a few years of them and all made tremendous amount of money and profits on those. We follow a little bit of a different model, so it's different land guys, right?
It's really funny, Jack, because I bought land in Florida way back in the day. Bought land in Florida, and then I went back to so I sold all of it, of course, like an idiot. I sold all of it, and then I went back to build a house and bought. And I bought a lot in the same area for 20 times what I paid for it.
Yeah.
Unbelievable.
It's the eternal curse of the transactional business, right? So we flip land. So we buy and sell land. We figured out how to find owners that don't want their piece of land anymore, and we pick up their properties for 10 to 50, 60 cents on the dollar, and we turn around and we wholesale land. That's an active business. It's a great business. You can make tons of money, but the downside of any active business is that you don't get to participate in the appreciation unless you hold on to some, right? And that's unless you hold on to some is something that I've done too little of, and you have done too little of.
Yeah, and the timing of our too little was also very poor, Jack, because we were both buying 09, 10, 11, 12. Oh my gosh, man. I just think about all the real estate that I sold. I was begging people to buy back then. Like I was literally like, you really need to buy this. It's on sale, like so cheap. You can't even replace this for the amount of money that you can buy it.
Don't beat yourself up too bad, because here's the thing, like you also were working on making sure that you keep the doors open in that environment.
Yeah, it's true.
You had operations and you had things like that. It's easy to say afterwards, oh my God, I should have held on to that. Just like it's easy to say that you should have bought crypto and it was $5, right? But and then it just hit $100,000 as of this morning at the day of the recording. But the point is you have a business to run. And unless your business is so profitable that you can just simply say, you know what, let me just hold on to these X amount of pieces of land or houses or whatever it is. Let me just sit on them, because we have also done that. Like 2009, 10, 11 is when we started also buying houses. So we bought like 50 houses during that time period, and the least valuable of them tripled in value, and the best ones went up 10x in value. So, and we still own majority of them. Half of them we have just sold right now over the last couple of years, because they were like in markets that we don't really enjoy owning. But the ones here in Phoenix that we bought for $40,000-$50,000, they're worth $500,000 now, and we own them, all of them still.
Yeah. And I think to your point, the other thing is that over time, you gain wisdom and experience, and so the purpose of this podcast, and Jack has a great podcast. You guys should look Jack up and follow him on social media and YouTube and everywhere else. He's got a ton of really good content. But I think over the years, as you gain experience, Jack, that's when you go, okay, well, I learned that lesson. And yeah, I mean, when everything crashed, there were very few people who were in our business that actually made it through. So I feel myself very fortunate. But I learned a lot of lessons through that. In the event that ever happens again, which I'm not sure that it ever will, but in the event that it does, I know what to do now to take advantage of it way better than I did back then. And I thought I was killing it back then. So with that experience, I think I think it falls on our shoulders to be able to share that experience with everybody, especially people who are listening and paying attention, to help them understand what to do in similar circumstances and in the market today. I'm curious what your thoughts are on the market moving forward, 2025. What you think people ought to be doing in the real estate world and in the business world. Love to get your thoughts on what's up in the next year.
So, I mean, that's like asking, is real estate is really not one thing, obviously, as you well know, right? You own commercial, residential, you've done a bunch of land and things like that. So my thought is I need to compartmentalize into that different asset classes. So if I look at the land itself, I think land is very, very strong. We have entered the time of the land. I think COVID has changed the land game dramatically. Of course, we're past COVID, but somebody said, and it first took me by surprise, but then I actually think I agree with it, is that COVID has affected the American psyche and the American fabric more than the World War II. And it's very simple, because World War II, in a day-to-day operation of America, didn't change that much. You still got up in the morning, you went to school, or you went to work, you came home in the evening. Now, a lot of the men in World War II were gone over in Europe, and many were killed, unfortunately, and of course, really dramatically. But still, and women went into factories and things like that. So a lot of that changed. But on a basic kind of thing, you could still drive down the road, go to your local diner and eat, and so on, and that changed. It's like the way we live the day-to-day life dramatically changed during COVID. And what that drove is a couple of things. It drove a humongous drive for people to enjoy life now, versus because it's like, oh my God, I might die. I'm perched into my apartment. I can't go into the park. So a lot of people reacted by basically saying well, screw that. If I can't go anywhere, let me go get an RV and go out into the nature. And then they realized they enjoyed that. So RV sales took off like crazy. And now with satellite internet, like the Starlink and so on, you can now even everything has gotten much more accessible. So land in the outskirts of town, land like having your own ranch, having your own mini ranch or things like that has gotten so much more attractive. And just overall having more space. People have working, still more than a third of Americans work from home. So they now have the option of buying 2 acres, half an hour outside of town, or 5 acres, having a garden, having some chickens, having no HOA, having the government leave them alone, yet within half an hour they're in town. So now they can live there, build the life there, but still be close to thing. And internationally, this going on. I have a distant cousin that is an engineer at Mercedes-Benz in Stuttgart, and he just moved back to his hometown, which is a 2-hour drive, but he only has to go to the office once a week. So he prefers being 6 days a week, close to his family and all his childhood friends and everything. And then one time a week, he gets up at 5 in the morning, gets in a car at 5:30, drives to Stuttgart, works all day, and comes back in the night. That's worth it. And so that 2 hours is an extreme kind of example, but the U.S. has doing this all day long. So what that means is that the demand for land has blown up, and particularly the demand for larger land, for a couple of acres, 5 acres, 10 acres, and if you go further out, the large acreage. At the same time, we have a shortage in houses. So the land, the infill lots, if you look in the city or right on the outskirts, land that can be developed immediately is in high demand, because even though we have high interest rates and they might slowly come down, the interest rates are not so high that people can't buy houses.
Yeah, man, everybody keeps saying, yeah, I'm going to wait till the interest rates come down. And I'm like, man, I think you might want to check history a little bit. I bought my first property, the interest rates, everybody listening is gonna be like, yeah, I know we've heard this story, Ron, but I bought my first house at 8.25%. And my parents thought I hit the lottery. I mean, they were like that. I've never seen interest rates that low, because they bought their real estate during the 80s, when interest rates were double that. I mean, it's, and I thought I got a great deal. It was fine. And then when interest rates, back when I started actually investing in real estate and started selling investment real estate, interest rates were exactly what they are now. And I mean, I couldn't believe when interest rates got in the 6s, then they hit the low 6s, and it was like giving candy to babies, not taking it, giving it. And it was amazing. We've just been spoiled for so long with
I agree. Yeah.
Unrealistic.
But something else. Yeah. It's the same here. I bought my house at 7% and it was like, great. And then went a little lower and so on. But the thing is, so again, we're not in a bad environment. Prices are stable in most markets. In some markets, they're settling a little bit. So builders are building. So again, any kind of the typical asset classes that we deal with, it's infill lots, land in the path of growth, so just outside of larger cities and larger acreage in rural areas, they're doing really, really well. But there's one part of land that's not doing well. And I want to make sure I mention that. There's a lot of land in the U.S. that is really, really cheap. The U.S. is a very, very large country, as everyone knows, of course, right? So there's areas where land is worth less than $20,000. And those lots right now are not the ones to deal with. So in the land space, right? And I can go.
Are you talking in the cities and the land that's worth like 20 grand, or do you talking?
Well, if it's in the city and it's worth 20 grand, then it's usually in a ghetto.
Yeah, that's what
those are not good land, the pieces of land to buy anyway, because no builder is going to pick those up. Because land in infill lot is usually worth 20 to 25% off the house value, but it's only true if the house values are high enough to cover construction costs and then some. Because how much does it cost to build a brand new 2,000 square foot house today?
Yeah, well, it depends on the market, but it's going to cost you at least a couple $100 a foot, I would think, in most markets.
Yeah, so let's just say a simple starter home, $150 a foot, $300,000 just for the house. Well, if you're in a neighborhood where the average house, like a ghetto neighborhood, where the average house costs $80,000, nobody's going to ever touch that lot than to just park something on it or to make a playground out of it or anything like that. So when I'm talking about the $20,000 properties, I'm meaning more the ones in more rural areas, but like low-cost land. There's land in northern Arizona where you can get 5 acres, and the 5 acres is worth $5,000 or $10,000. Where you can get 20, even 15 acres are worth perhaps $20,000, $25,000. And the point is that what happened is also after COVID, the government throwing trillions of dollars at people through COVID and things like that. Inflation has temporarily, hopefully at least, only eroded the buying power of the lower socioeconomic group of people in this country. Basically, the people making $25,000, $30,000, $35,000, $40,000, you pay $1,500 in rent, you pay $500 for your car, you pay some insurance, a little bit of taxes. You have no money left when groceries
if you're lucky.
Yeah, if you're lucky. If groceries is double, tripled, which we all know they have, you have no money left to do anything. And those kind of properties we used to pick up $10,000 lots for $1,000 and sell them for $10,000 with a $1,000 down payment and a $200 a month, monthly payment. Yep. And we used to do those all day long. That buyer group is currently just not there. they have disappeared.
Well, yeah, they have no
They're
disposable
disappeared.
income.
Yeah,
You know,
yeah.
to
They want the land, they just don't have the money to pay for the land. And unfortunately, those are the people that don't have 10 grand to pay it cash. They need seller financing. They need a monthly like installment sale kind of method.
Yeah.
On the other hand, everything over $30,000 and like particularly 50, 100, 200, $300,000 like a sweet spot, those people continue to have money. People that have good incomes continue to have good incomes. And with all the COVID kind of stuff, they're rushing to buy that property and they're putting it out. They're paying cash for these properties. So the market on the high end is doing really, really well. The market on the low end is not doing well. So what that means is very simply, our students are doing record profits right now because we're steering them towards the higher end properties and they're making 30, 40, 50, $100,000 profits on their deals versus some other people that teach this. They continue to teach the same thing of go get an $8,000 property for $800 and just people get stuck with these deals because they just don't sell. So it's a different thing. Now, with that said, other asset classes are different. So I don't see a crash in any in residential market before coming. I think we're already at the bottom of multifamily right now. If you look at multifamily, we invest our money from land flipping into multifamily. So we own like around 800 units right now, 800 apartment units. And some of them are not doing so great right now because we're seeing a lot of influx of brand. Like we knew that was coming. Like everyone that started building when interest rates were at 3%, well, their apartment complexes are going on the market right now. And they're bringing lots of influx and they're offering all kinds of specials. So it trickles down through the market. But the good news is here that when interest rates chopped up, everyone stopped buying. So in a market like Phoenix, where I'm here, and the same thing in Tampa, Florida, where I'm also, and in Dallas, where I'm also operating in those markets, there is a clear indication that the new supply of units is going to fall off a cliff starting at the end of 2026 or somewhere in the middle of 2026. And then in 27, 28, we're going to have a severe shortage of apartments in those high growth markets. And that's when we are planning to sell our properties. So we're in a so right now the cash flow is not great on them, but it pays for the bills and it pays for the mortgage and our investors get some return. But looking forward into the 27, 28, we're extremely bullish concerning values because there's just not going to be enough product out there and everyone's going to chase it. And now with Trump and coming into power, there's going to be some regulations probably going to be reintroduced that were there with bonus depreciation and things like that. So
I can almost guarantee we're going to have bonus depreciation. That thing stalled. It already passed one house of Congress. It's stalled out. I'm not exactly even sure why in the other chamber. But that thing, I mean, that thing passed in the previous administration. It's going to pass, and he'll bring it back because he knows what is going to happen when they do. And that'll be big for housing. It'll be big for multifamily. And both of those things are going to, I think they'll blow up. I don't think interest rates are going to come down. If they do, it'll be
come down into the 5s or 5.5s or something like that, perhaps, but not back to like 3%. That would be, I think, pretty crazy.
It would be nuts. I mean, it would. I think that the inflation that they're trying to get under control would. I mean, it would go nuts again. Everything would go up in price. I don't see that happening. However, I'm with you. I don't think that I don't see a crash in the housing market. There's just too many levers that are pushed in the positive direction for that to happen. It would take a major event for that to happen. Let's put it that way. And even that, I'm not sure would do what.
And of course, I mean, a black swan event like we had with COVID and with other things is always possible. But I follow a lot of smart people because I mean I'm not that smart, so I'm following the smart ones, and I'm and none of them sees something like that coming. Because here's the thing: 2008. If you had paid attention, you would have had it seen in coming because some people were like saying like, this is risk. Something really bad is happening over here. Just everyone ignored them here. And I don't currently see those people. The only thing that people are talking about there is credit card debt and student loan debt. Those are, of course, but they're they didn't just pop up. They're just there, and they continue to be there. So I don't think they're all of a sudden going to have a meltdown or anything, shape, or form like that.
Yeah, and I'm not sure that those are in the right band for home ownership to be a problem either, right? I think
I agree.
I think they're in the same band that you were talking about earlier, or you where inflation has just annihilated the middle and lower middle class. So,
and that I hope if with Trump, again, pro or con doesn't matter, but if with Trump as a pro business and pro real estate and pro economy kind of president, if the economy takes off, then usually it's about a year delayed until the lower income classes start making some real gains. And when that happens, I think then credit card debt should be in check again. And then again, for me, speaking from land, then the lower price properties will be in demand again, because it's not the first one we see that. Like, I've been doing deals since 2002. In 2008, 9, and 10, the exact same thing happens. The high price properties continue to sell. They dropped in price, of course, but they continue to sell. But the low price properties, they were just, the bottom fell out of that one. But then fast forward a few years, and that recovery was slow. On the real estate side, that wasn't a big spike back. That took several years. In this case, we're not even talking real estate is not down. It's just that the buyers don't have the money right now. So as soon as the buyers have the money, I think that'll pick back up. So I estimate that within a year and a half from now, those cheap properties will sell again. Not that I actually deal with them myself anymore, but quite a few of our students like them. They like picking up something for $500 and making a quick $5,000 on it or so, or $10,000 on it. But right now, the better price is to be at the higher price range. But even those lower ones, they're going to come back again, because that just happens as people start making money again, as they're feeling wealthier. They're like, okay, now let's get that piece of land that I actually wanted to put an RV on there, that I wanted to build a house on there, that I wanted to as a weekend getaway, and so on.
Let's talk about one thing that I think is super interesting. I think most of the people that I know who own a lot of real estate, like you, a lot of our friends, they don't ever really stop buying. They continue to buy, and I think that it's a foreign concept for a lot of investors who just haven't done the amount of deals and don't have an understanding of, maybe they're scared of the market, whatever the case may be, or they hear something on the news. Y'all got to stop listening to these people on the news. They don't know what they're talking about. Anyway, that's an aside.
I agree with that, by the way.
Yeah, I mean, I don't know how you become an expert on the news, because they're constantly wrong about everything, and then they just get right back on the news as if nothing happened. Yeah, I don't understand that. Anyway, so talk me through the psychology of all of the people that we surround ourselves with who continue to buy. We were buying. It's almost like anybody who bought in 10 through 14 is like they're ruined. They're just like, well, I can't get this kind of a deal anymore. Well, yeah, you probably won't. You might not ever again in your life get a deal like that. But that doesn't negate the fact that real estate continues to do really, really well over time. And the people in the business, the people we surround ourselves with, they keep buying real estate, and it keeps doing really, really well.
The psychology behind it is really, that's an interesting question. Let me think
Only
about
deep
that.
questions for you, Jack. You're too smart to get on here and ask simple questions.
No, so the psychology of why somebody continues buying land is very simply that I can only speak for myself, and that is like, I'm a numbers guy, but in terms of those things, if the numbers make sense, I buy. So when everyone was crying wolf in 2009, and everyone's like, the sky's falling, or let's go 2 years before, 3 years before 2006, that's the time where I didn't buy houses. I bought flipped land. But first of all, if you wholesale, it doesn't matter what the market does. If you put something under contract and you don't even own it, and you find a buyer that's willing to pay more, and you're doing a one-day transaction where you're buying and selling it in 1 day, your risk is reduced to zero. So you can do deals in any market, no matter what it does. So that's number one. But from a buy and hold point of view, The only time that we did not buy and hold was 2005, 6, 7, particularly in the house side, because the valuations and numbers just did not make sense to me. Like, if I want to buy, I'm not buying as a speculation. I'm buying as a cash flow rental property kind of deal, which is what you do with your investors, right? And so in this case, when a house costs $250,000 and the interest rates were at that time, whatever they were still 5, 6, 7%, and you're getting $900 in rent, then the cash flow does not make sense. Just doesn't make sense. But 2 years later, when that same house costs $50,000 and the rents are now $1,100 because everyone got evicted from their house and now they're looking for rental properties. So rents are up $1,100, $1,200 and their house costs $50,000. I was like, I would be completely stupid to not buy right now. So the first thing I think people that constantly buy, they don't watch the news. They don't get the Chicken Little is like the sky's falling. They just look at numbers. So I look at numbers and I was like, that makes totally sense. So now what happens right now with let's fast forward to right now. Multifamily, there's about 20% of all multifamily properties right now are in trouble. The larger property, because they many of them bought 2 or 3 years ago when interest rates were 3%, bought with a bridge loan, basically a 1 to 2 year loan to put up all of money into rehab, but it has a flexible interest rate. And therefore, the payment is flexible. And then those things expired when they had to refinance, but they expired into 7% loans. So their monthly payment has doubled, but the rents haven't doubled since then because a lot of product is coming into the market and rents has actually been stagnant for the last year or 2 years and have not growing, year and a half or so, have not growing. So a lot of these loans are have problems. So the first thing I do is I never get a bridge loan. So I only buy, like I bought during that time period, I bought properties in 2018, 19, 20, 22, 23. I bought properties this year, multifamily properties, but I buy always when the numbers make sense as is. And if I can get a 10 or 15 year fixed rate loan.
Yep.
Because that allows me to now like wait out any kind of turbulences in the market. So again, it's a numbers kind of thing. Does the numbers make sense? Yes, and I buy. And now the other hand is whenever there's pain in the market, there's opportunity in the market.
Yeah,
so
and I think
the last property we bought was 90 units in Dallas, Texas, or in Fort Worth, Texas, that somebody had actually lost. Exact same case. The private payment doubled. They didn't have enough money left. They ran into their reserves, and they took a $4 million loss on that deal. And we bought that property for a 7.5 cap.
Yeah, and
all we need to do is sit on that thing for 3-4 years until 2028, and then there's no doubt that it's going to be worth like probably 40-50% more than it is today. So again, the numbers make sense, but even there, what did we get? A 10-year fixed rate loan. Because I don't know the future. I don't know if prices are going to go up or down or what. But I know that these rental rates and these occupancy and this price and this interest rate, I can make the numbers work. I can pay my investors a dividend or a preferred return, et cetera, et cetera. So we keep buying because we're looking at the number. And in any market, there's good deals. And that's really there.
Yeah, and and especially right now, right? Because the builders are trying to stay. They're trying to keep their crews busy because they know we have a shortage. They've got to make it through this little downturn, in people where people are freaked out because of what the news is saying. There's still this massive demand for housing, and that's not going away anytime soon. As a matter of fact, it just, if you actually look at the population growth map and you overlay it with housing starts, there is such a massive trough for almost 10 years of us being below where we need to be for housing starts for new construction. Yep. And the population growth is just continues to go. And then of course there's all the population that we can't even count, right? They're not counted in the numbers, right? So that's not going to stop anytime soon. And we have all these builders who they're continuing to build at a decent clip, but properties aren't selling as fast as they need them to sell. There's a whole bunch of there's a whole bunch of incentives from those guys to move those properties that make them attractive. Depending again, like Jack said, depending on the market. That's really, really important because even with incentives, you can't overcome the numbers he was talking about. $250,000 with $900 rent doesn't work ever. It just doesn't work. That doesn't work. You can't do that one, right? But that's really not what we have today in most of the Midwest, Mid-South, Southeast type of markets. Those markets actually can work. The numbers actually do work. Yeah. So
like I don't buy single family rental houses in Phoenix currently, even though friends of mine do, because I moved simply out of the single family market. I do land deals and I do multifamily deals. But one market that we're going into, because our students are now going into that, and some of our coaches have started doing that, and so is entitlements and things like that. Because I think, again, we're looking at this, the market, the interest rates are settling just a little bit. People are starting realizing they're not going to go anywhere. Prices have reset to where they need to be on land. And so now building something becomes feasible again. And I have friends that are building. A friend of mine in San Antonio is building 324 units on a piece of land, and it makes sense. The numbers pencil. Another friend of mine here in town, one of the Rich Dad, Robert Kiyosaki Rich Dad advisors, he's building properties in Phoenix. He's building properties in Vegas. He's building large apartments, because if you the numbers do make sense. So you can build right now. Just for a couple of years, people have stopped.
So Jack, you said
you can actually make money there.
You said something that I think probably the majority of the people listening don't understand what you meant or what you said. So I'd like for you to explain it, and then I also want you to just kind of tell us what your students are doing. So you said entitlements. So your students are doing entitlements. What does that mean? And then after that, what are they doing? How are they making money? Just doing entitlements.
So this is like, so a couple of our coaches, and again, you mentioned a mastermind that you joined back in the days. Back in the days, it was a mastermind that we have intended for multiple kind of industries to come together. Now, after some years, we shut it back down, but actually just a year ago, we started it again. This time it's the mastermind for the top land entrepreneurs in the country. So we got the top realtor in the country that sells over $1 billion worth of land in that group. We got the top guy on conservation easements, on timberland. We got an oil and gas guy that talks about mineral rights and things like that. We got a ton of people that do land flips in the group. And we also have a few people in the group that do what's called entitlements. And entitlements is basically when you have, like, say, you find a 5-acre lot somewhere in infill lot, that perhaps it used to be an old high school or something, and it was torn down, and it just sits there, and you can buy that property. So let's say this is not a cheap property. So let's say you get it under contract for $2 million. So this is a little bit of a higher end game, but it's $2 million. But now what you need to do is you might need to have it rezoned, because what you want to do is on 5 acres, let's say you want to put 100 townhomes on that thing.
Yep.
Right. And actually, this is an actual example from one of our mastermind members. He's taken 5 acres in Utah and actually then made a plan to put a total of 88 townhomes on there. It's actually 6 houses and 82 townhomes. So what he went to the city and says, like, hey, what would you like to see there? And the city said, like, well, we'd like to have some high density things, but not like a really apartment complex. We need to have some more people living in that area. So like, great. I'm proposing to put townhomes on there. And they're like, great, let me see what your proposal. So they had to do a rezoning, which took about 6 months. And then he basically worked with the city on planning it all out and designing it. And this is the key. This is a paper-only exercise. You don't actually do like split lots, and you don't actually go and dig anything up, and you don't put utilities in or anything like that. It's purely a paper exercise. And after the end of the day, he had a completely set plan with, like, here's the entrance to the subdivision, here's the flowers going to go, here's some trees going to be gone, here's where the sideways are going, here's how the units are going to be designed, here's the space of the units, how far they are from each other, and things like that. And that he got approved by the city. And once you have that approved, you are entitled to build on this thing on that land. That's why it's called entitlement. The city gave you the right, so you are now entitled to build this exact plan on that exact lot. The nice part about that is that builders, developers like Toll Brothers, H&R Horton, things like that, they are not typically in the entitlement space. they're in the building space. So what these guys often do is they go, because there's a little bit of risk involved in that deal, because the city can say like, no, screw that, we don't want that. And then you have to abandon the deal, and you might have abandoned, put in a bunch of time and effort into there. But if you get it through, what happens is that $2 million lot is now worth $5.5 million.
Yep.
Because you're now selling that to a builder, and the builder gets the building permit and starts digging the next day. And so, in essence, in that scenario, this mastermind member of us, not a student technically, it's a mastermind member, he's an expert, but he went through our coaching program first. He had a couple of partners involved and a couple of other people involved, but he ended up making $1 million on that deal. Good payday.
Yeah, I have a bunch of buddies who do it as well. It's a very niche thing. Right. It's if you know what you're doing and you know the right people, you can get things done on pieces of land that have been sitting for a long time. And you can get decent deals on that land. But even if you don't, the entitlement makes them worth so much more money that it's worth doing. And you're going to have to spend. I'm sure you're in Utah. They probably spent six figures of some size doing that, with
about $150,000 they spent on engineers and engineering reports and draftsmen and architects and things, and having it all designed and back and forth and certain impact fees and this and that, and until you finally get it approved. And that's the risk on it. So it's not something for everyone, but that's something that we're going to do more in the future. And that's something that I think the timing is right for it too right now, because it was said, like, for the last couple of years, nobody started new projects because interest rates were so high, everyone was scared, their projects got into trouble and things like that. But now, if you start something like that now, it might take you 12 months to go through one of them. Now you're basically selling it to a developer in 2026, who then is going to start developing, building it, and be done with it in 2027, 2028, right at the peak of demand, when more units are necessary, and they can probably ask for the top market value of these kind of properties. So the timing is good to do this right now. That's just one of the strategies we use. I mean, we do all kinds of different things in the land space. Our cookie cutter model is obviously just like get a $30,000 property or $50,000 property for 15 and sell it for 35 and make 20 grand. And you do that, wholesale that all day long, or do these seller financing deals. But then as you become an expert in that, our students become masters, and they start doing more and more advanced kind of things in the land space.
Yeah, I remember you mentioned owner finance, and maybe we'll kind of finish up on this piece. But I remember distinctly one of the things that helped get through all of that downtime is you guys had, I can't even remember how many, but tons of notes on land that you guys were cash flowing with basically no expense whatsoever.
Zero.
All right, you just had these notes. And I remember from the mastermind, I mean, you're like, look, our default rate is almost zero. The people want the properties, they pay for the properties. Walk us through that. I know we talked a lot about flipping. Yeah. We talked about a lot about flipping land, but this is a way to long-term flip land, and there's some really good
and create some massive benefits, income and cash flow stability in your life from that. So that was the biggest thing. So we started doing land deals in late 2002, and then 2003 we incorporated, and in 2003 we did 63 deals. In 2004 we did 150 deals. Then afterwards we did something like 600 to 800 deals a year for a couple of years. But then in 2000 and what the way we started offering these deals again and again and again was, we said, like, simply, you can buy it cash, or you can also buy it with seller financing. So a $50,000 property that we put on a contract for 15 grand, we would put it under, or for 10 grand, let's say, we would put it on the market for 50 grand. Somebody would say, yeah, I want it. We ask them for 20 to 30% down, basically $10,000 to $15,000 down. And then we allow them to repay the remaining 35 to 40 grand in monthly payments of $500 for the next 10 to 15 years. Usually also charge a nice interest rate, because banks don't lend on land typically, or if they do, they only lend up to 50% loan to value. But we were giving them 80, 85, 80% loan to value loans. or allow them to only put 20% down. And so that creates, because of that, we were charging 12.9%, 13, 14, 15% interest rates, which are 100% legal. Just need to check in for the usury rules in that state. But as long as they're legal, you can charge them, and they're very normal. Because even in today's environment, the bank will charge you 10% on a piece of land alone, even though they only give you 50% loan to value.
Yeah, if you're lucky.
Interest rates, I mean, 10 to 12% is more like.
Yeah, prime right now is, I think, almost 8%. So there's no way you're going to. I mean, if you got one for 10 on land, you're doing really well.
Exactly. So we're charging 13, 14, 15 because we're giving 80% loan to values. Nobody complains. All good. So we started doing this more and more and more, and we built up hundreds of these loans to the point that we're making $71,000 a month in cash flow on these properties. Now, if you heard me say it, in many cases, the down payment paid for what we had to pay the seller. So we put a deal under contract. We did what's called a double closing. We had this property under contract for 10, sold for 50, got a $10,000 or $12,000 down payment. Let's say a $12,000 down payment. The $12,000 down payment was enough to pay the seller, was enough to pay the title company. We had no money in the deal, and now the remaining $38,000 are going to be paid with $500 at 15% interest for the next 14 years. Yeah, and we're just getting flow like that. And then every single payment is profit. Go ahead.
Even if you closed on it, you get your money back anyway, right?
Exactly. When you close over time, we started closing on them, but at the beginning we didn't have the cash to close on them, so we did those double closings. But then we started just buying them because, some deals are cash. Some people choose to give you're selling it. Sometimes you take a deal like that, sell it for $35,000 cash. Well, great. Now you have $35,000 cash, and our expenses didn't really go up. We continued living in our small starter home until we moved in 2006. We moved to a bigger home. But for the first, until then, we had an 8-figure business at that point already. So we stayed in that little house. We drove the same car, an old Geo Prism. We even sold one of our cars. We kept a really low cost of living, and we just started making money. And then 2007 happened, and what happened in 2007 is that the way we sold these properties early on was in big, large live auctions. We would buy 250 properties in a quarter, and then put up an auction, sell them all in one day. Very expensive, very intensive, very labor intensive, had a lot of people working and so on. And in 2007, this model stopped working. So what happened is we had about a 6 to 9 month period during which we need to figure out what to do next. And what we figured out to do next, first of all, the model stopped working because real estate started getting a bad rap, and people would shy away because they believed the media, even though it was really the time in America was
the best time to buy, and the stupid media.
I know.
Have you ever seen the graph of the real estate cycle with headlines from the days?
No, but I can imagine that it's like when it goes down, everyone's like
completely backwards.
Real estate is bad, and it's actually the exact opposite.
It's completely. It just makes my head hurt. And here we have the whole country. Most of the people listen to those idiots, and they don't have any idea what they're talking about. So much so that the absolute best time to buy, people were scared to death.
Yeah.
It really is too bad.
So our dynamics in the land space was a little bit different because people still wanted to buy pieces of land, but again, but our method of selling it wasn't working anymore because people would shy away. They wouldn't attend these auctions anymore. So we stopped doing the auctions. We were like, well, how do we sell these properties now? We know exactly how to get hundreds of these properties in, but we don't know exactly how we sell them right now. And that's when we figured out that we can sell them online, that we can actually put them on websites. At that time, Zillow existed, Facebook was existing, Facebook groups existed, Craigslist existed, different Redfin. I don't know if Redfin was around, but Realtor.com was around, Landwatch.com was around. So we were able to change our business model, and instead of buying 250 properties in 3-4 months and selling them in one day, we were now basically buying them every day and putting them out on different platforms and selling them every day, which was a much more sustainable business model. But what happened also in that time period is obviously and what helped us really tremendously during that time period is that the fact that we were getting $71,000 a month in cash flow. Because when you get that kind of money coming in, you can literally stop what you do, take a few months and just figure out how you change your business model to continue what you'd want to do. And that's what other people didn't have. So the demand for land wasn't going away. The prices went down. So yes, there was about the same 6 month period where the sellers were still holding on to the high prices and the buyers were already down. So there was like a discrepancy during that time period. But again, over 6 months, it all settled out and we figured out, we can go online and sell them out then. So we just kept going. So we didn't skip a beat during the big recession. Our business continued to work. We continued to make money, a little bit less money per deal because prices did go down, but we were continued to do making deals. And then in the loan performance side of things, we did have about 15 to 20% of the people who had starting to have trouble making payments. But the way we fix that is very simple. If you give somebody seller financing, you are the lender. And what did lenders do in 2008, 9, and 10 a lot? They did loan modification.
Workouts. Yep, they did workouts.
So it's the same thing. We just reached out to them and said, like, listen, do you not want the piece of land anymore, or you just have trouble making the payment? They're like, no, I love my piece of land. I have trouble making the payment. Great. Let's stretch the loan out. Let's lower the interest rate. You paid 5 years already. You paid, 50% of the equity already. Let's lower your interest rate a little. Let's spread out your loan by an extra 3-5 years. Let's lower your payment. Can you make that payment? Yes, great. So we were able to save most of those loans, keep them performing, and continue to make really good money on them. And again, that was a fun time. And when use that money, that's the other thing. Then we were in a beautiful position, and that is to use that money to go shopping in the housing area and start buying those $40,000-$50,000 houses that are worth now $500,000, and we own several dozen of them. And that's become a really beautiful nest egg to sit on, along with other things we've done, and then roll that into multifamily and build that up, and et cetera, et cetera. So it's been a beautiful wealth cycle, multiple wealth cycles. But the key of it is that, and that's perhaps one really important thing, is it worked because we had built up a right income machine and cash flow machine at the right time. So what I tell people right now is right now is a great time to build up such an income machine, whether it's land or anything else. But the point is, build this income up, build this cash flow up. Because if we hit a snag in a few years, you'll be in a position to take advantage of that snag and not be in a position that's like, darn, I wish I would have back then.
Yeah, and you'll also not lose. So many people lost so much, decades worth of savings and work.
Yeah.
And the reason is because they speculated instead of doing by the numbers like we talked about earlier. If the property's cash flow, odds are that the rent's going to go up during some kind of a crisis like that anyway, because there's more people who are going to need to rent. And so it's just, this isn't really complicated. I'm not the brightest guy in the world either, Jack. I mean, Jack said he wasn't the brightest. He's actually pretty smart, but he said he wasn't.
So are you. You're smart.
The most important thing is just to run your numbers and just, stick with your plan. It's not any more complicated than that. It really isn't.
No. Really is shut down the noise and pay attention to the numbers. And
then the other thing, I don't know if everybody caught it. Jack started doing this in 2002. That's a long time ago. I mean, he didn't this didn't happen. Jack's one of those overnight success that took 20 years, right? And there's a lot of us overnight successes that took 20 years. So if you're just starting, I'm not saying be patient. I mean, get out there and kick some butt. However, time in real estate makes a fortune. That's where the wealth is really created, is over time, and continuing to invest and just look at the numbers and make it. You have Jack sitting here telling you exactly how he did it, starting in 2002, and just all the different iterations of the business and how the business model worked its way out, and then moving into different types of real estate. And I think it's really cool to hear success like that. I just caution everybody, if you're starting today, just understand it's going to take you a minute, but don't stop.
There's actually work involved. Imagine that.
Yeah. And on that happy note, Jack, I really appreciate you joining and sharing so much knowledge with everybody. Where can people find you? How can people get a hold of you if they want to connect with you?
Sure. Well, if you want to learn more about the land part of things, as I said, we teach this. We've been teaching this for 16 years because that actually strategy that enabled us to now sell it all over the place on a daily basis, that's actually what's replicatable. Our auction model wasn't replicatable, but everyone can go out and put their property on landwatch.com, on Facebook, on Zillow, and different places and sell properties on a day. So basically, at that point, we started teaching this, and now we've created over 1,000 millionaires with our program. And you can simply go to landprofitfun.com, like fun, like having fun, like landprofitfun.com. If you go there, you can download what we call a 30-day blueprint, which is basically a very detailed PDF that tells you exactly how you need to set this up and how you do this for your own. You can also follow me on my own podcast, The Jack Bosch Show. You can follow me on YouTube. I have a 7-part series that also talks about that. That's under Jack Bosch. On all social media, I'm under my name or Land Profit Generator. So many different places to go learn about what we do. And again, on social media, I talk not just about land, but I talk about all kinds of different things. So, but again, landprofitfund.com or the Jack Bosch Show or Jack Bosch on social media.
Really appreciate you, my friend. And everybody out there, there's a lot of knowledge out there. Go get it from the right people. Jack's one of the good ones. And until next time, get out there and make something happen.
This has been the Get Real Podcast. To subscribe and for more information, including a list of all episodes, go to getrealestatesuccess.com.